Hey, welcome back to YT Finance, and today we are talking about a political representative who bought into Donald Trump's DWAC stock to support him when the companies eventually merge, because again, this is a SPAC stock. Then we will discuss why Robinhood's HOOD stock is falling and how poorly they did on their earnings report. After that, we will talk about Progenity's PROG stock, which could short squeeze massively. Then we will end by discussing why Ocugen's OCGN stock is skyrocketing. As always, if you stick around and watch this full video, I will have 2 bonus stocks at the end for you. Go and press the like button right now for more stock news updates, comment down below your thoughts on these stocks and stories, turn on all subscription notifications to stay informed, and now let's get right into today's stories. Representative Marjorie Taylor Greene, who is a Republican from Georgia, has invested over $15,000 into a blank check company whose ticker symbol is DWAC, which will be taking Donald Trump's new social media company public later next year. DWAC has been a red-hot stock lately because it has surged more than 800% in just 2 days last week, so investors are interested to see where this stock is headed and how high it can truly go. This stock is one of the most talked about stocks on Reddit's Wall Street Bets chat room, and for good reason, because this stock has made people very wealthy. You can actually go and view what various political leaders are investing into on a plethora of various websites, and one of them is called CongressTrading.com, which is how we know this representative from Georgia invested into this SPAC company to support Donald Trump. However, the DWAC stock has pulled back in price recently and now trades at around $60, which is still a 6 times increase from its SPAC listing price of $10. 2 hedge funds have invested into the SPAC, but Lighthouse Investment Partners and Saba Capital Management have both dumped their shares after learning that Trump was involved. We also know that this representative sold $15,000 worth of Facebook shares, $15,000 worth of Apple stock, $15,000 worth of Amazon stock, and $15,000 worth of Alphabet shares, which owns Google. And she might use this new cash on hand to further invest into Trump's media company. So the DWAC stock could surge once again as the hype continues to spread, but we will have to wait and see. Now let's talk about Robinhood's HOOD stock and how it has fallen over 10% after it missed analyst revenue predictions. Even though Robinhood increased their revenue by 35% for Q3 to $364.9 million, it was still below predictions of $423.9 million. This was due to Robinhood's revenue per user falling by 36% to $65 from $102 last quarter. The company also said, and I quote, "Crypto activity declined from record highs in the prior quarter, leading to considerably fewer new funded accounts, a slight decline in net cumulative funded accounts, and a lower revenue in the third quarter of 2021 compared with the second quarter of 2021, end quote. But to be fair, Robinhood did warn investors about these seasonal headwinds, so investors should have been prepared for this. Next, we have Progenity stock, ticker symbol PROG, which has a massive short squeeze potential with around a 19% short interest according to Barron's and a 50% dark pool short interest according to Fintel. So this stock is a great candidate to expect a short squeeze from, but we don't know if this short squeeze will actually go through. Also, this company addresses and finds solutions to gastrointestinal or GI disorders. The company went public in June of 2020 at $15 a share, but the price sharply fell to $5 after it IPO'd, and it sank even below $1 for a short time, but recently the stock has been performing very well because it's now heading back up to $4 a share, while the current price trades around $3.80. The problem is that the company has a stock price less than $4, and they have a negative earnings of $4.28 per share, which is really not flattering for this company. This company mainly specializes in non-invasive oral diagnosis or treatment of GI disorders, which is much safer and less invasive than an endoscopy, surgery, or biopsy. So through this non-invasive route, it's very appealing to customers, consumers, and patients who need a diagnosis or treatment that don't want to go through any of the invasive processes or procedures. On the other hand, the really good news is that Progenity has a very large addressable addressable market of around $15 billion locally in the United States and $250 billion globally, which provides a huge market opportunity for this very small company. So if they can start scaling up their revenues and actually infiltrating this gigantic market, the company could do very well long term. More good news is that the company has over 170 patents either pending or already in their name. This intellectual property includes the following, and I quote, "An ingestible device for delivery of a therapeutic agent to the gastrointestinal tract, treatment of inflammatory conditions of the gastrointestinal tract, and treatments of GI tract diseases." End quote. So it looks like this company has their patents and technology in order to fully infiltrate this gigantic market, so hopefully they can start ramping up their revenues and getting their earnings higher. So some investors are putting a small portion of their portfolio into the stock on the chance that it short squeezes, and even if it doesn't short squeeze, they're just going to hold it long term. Progenity is also developing a test called Precludia, which will rule out a pregnancy-related blood pressure disorder. So this company is actively taking steps to develop new technology to help them bolster their revenues. This company also is a major favorite of many retail investors because they continuously push for a short squeeze in the stock, but it has not had any major success as of yet. But I think retail investors flooding into this very small cap penny stock is the reason why it's moving so much and why the price surged by 24% recently. So the recent stock price appreciation will most likely be given back up later because it has nothing to do with the company's fundamentals, revenues, or earnings. Some other red flags that I want you to be aware of is that the company's earnings fell by over 70% in 2020. The company lost $78 million, which is over twice the amount that they lost in the same quarter last year, and their second quarter revenues came in very low at $463,000. But on the flip side, the company says that their Precludia test could eventually bring in $3 billion for the company annually. So again, this is a high-risk penny stock that could short squeeze and has good potential in the long term, but you should do with this information as you will. However, I personally think it's too risky for my personal portfolio. Next up, we have Ocugen, which has surged by 22% recently due to a potential upcoming catalyst. So if you didn't know, the World Health Organization Technical Advisory Committee will be meeting to determine if Bharat Biotech's vaccine can be used, which is called Covaxin. The reason why this could be good news for Ocugen and OCGN stockholders is because Ocugen is partnering with Bharat Biotech to commercialize Covaxin in the US and Canada. However, the vaccine has not been authorized in either of these markets as of yet. Another reason why OCGN stock investors are very excited about this is because the OCGN stock is very heavily being shorted right now, so if Covaxin is approved, it could cause a huge spike in the stock price. However, we don't know how long it will take for Ocugen to get the vaccine approved in the US market and the Canadian markets, which would be a larger catalyst than them even getting approval from the World Health Organization. So because I don't personally own this stock, I'm not going to buy in, but if someone already owns this stock, you might as well hold through just in the off chance that one of these catalysts do go through or it short squeezes. That would be in your best interest and best risk management. Now we're going to move on to the bonus segment, and we're going to start off with Lockheed Martin, ticker symbol LMT. Currently, the Lockheed Martin stock price is trading at around $330 per share, and the company has a fair value price of $402 per share, according to Morningstar. So I think this is a fantastic buying opportunity, so I personally bought into the stock. The company also has a very nice 3.13 dividend yield and has very strong performance metrics, fundamentals, and financials on top of great growth opportunities. So to me, this stock is a no-brainer to buy. But as with any stock, there's also the potential for this to go even lower. So if you want an even better opportunity, you are risking not buying in now. So the least amount that you could do is put this on a watch list or dollar cost average into the stock because it's so low right now. Next up, we have General Electric, ticker symbol GE, which released better than expected earnings and free cash flows recently. The stock currently trades at around $103 per share, but the fair value price is $131 according to Morningstar analysts. However, I am more hesitant to invest into this company than the last one because of its historical returns, but nonetheless, this is a great stock that is trading at a discount, which gives us as investors a great buying opportunity. So remember to do your own research to see if any of these stocks seem right for your personal portfolio. Comment down below which stock in this video that you are looking to buy into. Like this video if you made it this far, subscribe to stay informed, and I will see you in the next YT video.